It's the first day in the month of November. Welcome to Business Incorporated, coming to you live from Lagos, Nigeria. I'm Chimezie Obi Iwago. On the program today, Nigeria's Manufacturing Purchasing Managers Index surges in October to 64.8. Nigeria's Access Bank eschews mergers and acquisition in Ghana growth strategy. Plus, Old Mutual to retain 20% of South Africa's net bank after split. Let's get started now here in Nigeria, where the Manufacturing Purchasing Managers Index surged in October to 64.8 from 58.5 in September. The monthly PMI report released by FBN Quest today shows all 5 sub-indices picked up in September, and the lowest was an impressive 59.5 in the Employment Index. FBN Quest attributes the growth to the use of multiple currency practices by the central bank, which have transformed forex liquidity, as manufacturers or indeed any users of FX now have access through the various windows. FBN Quest says the positive impact of the multiple currency practices has gained momentum since July, and a more recent boost has been the seasonal rise in demand for the year-end celebrations. The central bank's PMI data also shows a further expansion from 55.3 reading in September to 55 in October. And to the markets, the positive PMI number released this morning did seem not to have made any positive impact on the Nigerian market at intraday, as the index was down 0.65%. Now, Dangote Cement, International Breweries and Nestle were the major laggards at the time. In South Africa, however, the JSE index went up 1.25% after South Africa's seasonally adjusted APS Purchasing Managers Index rose to its best level in 5 months, helped by an increase in new sales orders. Egypt was off 0.01%. Kenya's index rose 1.17% on Monday after the election board declared President Uhuru Kenyatta the winner of the rerun election. In the Middle East, Gulf stocks markets moved sideways in narrow ranges at intraday as rising oil prices again failed to boost Saudi Arabia's petrochemical sector, a sign of investors' concern about upcoming austerity policies. Higher oil prices tend to be positive for profit margins at Saudi petrochemical firms, but the industry faces the prospect of more austerity steps as the government cuts its budget deficit. The Saudi stock index was down 0.02%. In Dubai, the index was down 0.03%. Emma Properties added 0.2%. On Thursday, Emma is expected to announce the indicative price range for an initial public offer of shares in its local property development unit. Our Qatar's index also edged up 0.08%, but Qatar Fuel Corporation sank 2.0% to 91.10 reals, falling below major technical support on its January 2016 low of 91.74 reals. Abu Dhabi was up 0.12%. Moving now to Europe, where stocks edged higher in early trade despite a terrorist attack in New York as investors focused on earnings report. For more, let's talk to Ulrich Batz, my colleague at Frankfurt. Good afternoon, Ulrich. Thank you very much for joining us.
Hi.
Now, how is your market in Europe treating yesterday's Manhattan terror attack?
As cynical as it sounds, it's being digested quite well. The experiences of the investors here and also the trading professionals that such terrorist attacks, yes, they are terrible, they shock, and people are personally affected here as well, the traders on the floor also, but that they don't have any really long-term economical or corporate profit repercussions. The corporate profits continue to rise despite numerous incidents like this in the past months, and also the indices rise, corporate economic growth is there, inflation is going up, and so because of a lot of these good economic conditions, the DAX, for example, today reached a new record high. It's flirting with the 13,500 point level. It's not quite there. It wasn't very far away, and at the moment The index for the 30 biggest shares here in Germany is up by almost 2%, and European shares are also not depressed by that terrible incident in New York.
Well, perhaps before the market closes, the DAX will hit the top. Now, the U.S. Federal Reserve is scheduled to announce its latest monetary policy decisions today. What is the market expecting in particular, as this meeting could be the last before President Trump announces Janet Yellen's replacement?
That's right. The White House says that Donald Trump is expected to announce the Fed chair nomination tomorrow. That would be just one day after the results of this meeting. Janet Yellen, the current Fed chair, probably the outgoing one, is not going to appear before the press at this meeting. She'll be doing that at the end of next meeting. That'll be in December, and people there expect a rate hike and also more detailed explanations, of course, on the current state of the economy, the monetary policy effects, and of possible path for the monetary policy in the United States for the month to come. But for this meeting, there's 97% probability that nothing will happen, and that probability that December will see a rate hike. Everybody, of course, very, very anxious to find out who will be the next chairman of the Fed. It's one of the most important positions in the world that affects not only the States, but people around the world, whether here in Europe or in Africa or elsewhere. And all the bets are on Jerome Powell at the moment. He's been sitting on the Fed board for the past 5 years. He's a Republican, and like Donald Trump, he at least sees some reasoning for loosening up banking regulation.
Well, Thursday will be the day we are all ears. British retailer Next is one company that posted earnings today. Bring us up to speed with the numbers and, of course, other earnings on tap as we step into November.
The results were not what investors were expecting. They were a lot more disappointing. And, of course, part of this is the position that the British economy is in at the moment, a very difficult one. The weak pound drives up inflation. Lots of clothing is imported. The least of it is produced in Britain. Perhaps a Burberry coat on the high-end level, but very little else. And this is being felt with the Next. And the stock is going down by about 6%. Remember, though, that in the past little while, it's been going up by almost 40%. So, in turn, this very harsh reaction by investors today is partly to be seen in light of this very strong gain in the past months. But the loss today is also pulling down competitors Marks & Spencer and Primark owner AB Foods. BNP Paribas going down for the second day in a row after results having come through the British bank, the French bank, and it's also pulling down the shares of British bank Standard Chartered today.
Right. Well, Ulrich, we leave it at that for today. Let's wait for the Fed's decision later in the day. Thank you for your time. See you tomorrow.